IFSC as such has a very light touch regulations, which really enables a lot of investors to come to gift IFSC. Just to name a few, the cost of transaction is very low. When I say a cost of transaction is very low for an investor, there is none of these STTs or CTTs or GST which is applicable. There are no capital gains tax from an investor perspective, and it's they do not have the registration for an FPI is or for an investor to really come there is far less cumbersome. So all this really makes it very attractive for some of these guys to. So if I were to put it in a nutshell, it's more of the operational and the cost efficiencies that can really drive the global investors to IFSC jurisdiction. The India story is very strong. So if somebody really wants to participate on the IFSC, or in the India story, IFSC is a very good avenue for all of these foreign investors to come and participate.
So previously the foreign currency bonds were the game which was available only to very large issuers who were doing multi-million dollars issuances of $400-500 million and so, because the entire ecosystem was outside India, and that ecosystem was difficult to access for the smaller companies.
The corporates were so far borrowing loans, and we call it ECB, external commercial borrowings, or going out for listing of bonds to other jurisdictions. They were listing bonds in Singapore exchange, Luxembourg exchanges. They were taking loans from all other jurisdictions. Now all of that is concentrating in IFSC. Why? Because of several advantages that corporates enjoy. If they take loan from IFSC, it's more competitive compared to the loan from outside India. We have enabled that holding company structure in GIFT IFSC. Many Indian companies have established treasury center outside because the cost of funding and several other tax advantages they have. We already have the tax advantages, but we have also enabled the treasury center offices for Indian companies in IFSC now. So leading Indian companies like IOCL, OVL, they have already established their treasury centers in IFSC, and many other companies are already planning. These are Maharatna companies which have decided to establish their treasury centers here.
With the ecosystem here, with the depository here, with the clearing corporation here, with the exchange here, and with the presence of other intermediaries, the entire ecosystem is now available in this particular jurisdiction for Indian issuer to issue the foreign currency bonds.
They bring out the borrowings from global jurisdiction, and they facilitate the investments globally. They will also facilitate investments in IFSC and in India. So it will also reduce the cost of fund. So it is reducing cost of fund for Indian companies on one side, but at the same time bringing best practices, global practices here.
So in these calendar years, in FY24 itself, we have seen close to 30 issuances of foreign currency bonds. So the market which was available only to very large players has been now democratized with setup of this ecosystem where the smaller entities also can access the market. And I believe this is the start of journey on the debt side. Similar success can be replicated also on the equity side, where recently direct listing regulations have been put in place. So with those light touch regulations, I believe that a lot of equity issuances also will start happening in similar way as we have seen for the debt issuances.